Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. All right, everyone, welcome back. Hamish Hodder, what's going on, my friend?
Hello. What's going on? It was my birthday earlier this week.
Happy birthday, mate.
So, I'm 26 years old.
26 whole years. Jeez.
Yeah. It's crazy, isn't it? Yeah. Insane. What have you been up to this week?
What have I been up to? I got back for, nothing much this week. Last week I was on a trip to Uluru of all places. So that was really fun. Tash got invited to go with Virgin Australia. So I just tagged along as a +1. It was great. I got all the perks and I didn't have to make any content for it. But,
fantastic. Yeah. How's the big rock in the middle of Australia? How's it looking?
It's looking big.
Is it still there?
It's still there. Yep.
Okay, that's good.
It's still there, Hamish. Yeah, it is big. It is a very, very big rock. It's a very big red rock. It's much larger than I was anticipating it to be. It's apparently, and you had to laugh at me for saying this before, the largest clean-skinned monolith in the world. So there you go. Clean-skinned meaning that nothing's growing on it.
It sounds like a category that they just made up so that they could just say that it's like the biggest of that category. But yeah, fantastic. There you go.
No, it was really good. Well, had some great food. I can now say that I've eaten kangaroo and emu and crocodile as well.
Right. Okay. I'm glad you said that because I thought you were going to say you've eaten Uluru, like you ate some of the rock. I was like, I don't think you're allowed to do that anymore.
No. That was once the main attraction there. Would you like to eat some of this rock?
Yeah.
No, you could climb it at one point, but that has since been shut down.
No.
But fair enough too. That people used to. Well, firstly, it's not really respecting the indigenous owners of the land in doing so, but also people would just leave rubbish at the top of Uluru because there's no bins on top of it. That's for sure. And then it would all fall off or blow off and then go down into the water source below. So that has all been stopped a long time ago. Actually, that was stopped.
Yeah. Well, it's good that you're back because it's been a fairly busy week, I think, in business and financial markets. We've got more updates around the GameStop memery. It just never ends. It never ends. We thought we left this in 2021. We thought then, it came back last month, but we've got even more news to talk about. We got inflation and news out of the Federal Reserve. I'm going to talk about something we all love, ads.
Ads.
So everyone loves to talk about ads.
We love ads. I don't think too many other people love ads.
No. Everybody loves ads.
Everybody. For us, it's just a way of life. You got to embrace the ads, everybody. You got to watch the ads. You got to interact with the ads.
Yeah, exactly.
Everyone else is like, shut up.
So what have you got?
What have I got? I've only got a couple of stories today. I want to talk about Elon Musk's compensation thing because that's getting voted on tomorrow. And we'll talk about Apple's new artificial intelligence because, man, Hamish, it's gonna blow your mind. It's going to absolutely blow your mind.
Fantastic. Well, with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings. And manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days.
Indeed. All right, Hamish, hit me with this GameStop stuff. I haven't been following it too closely because I've been away, so you got to tell me, you got to bring me up to speed with what's going on. I've been seeing Roaring Kitty popping up with his live streams. I'm interested to hear about that.
Yep. So I think we did a brief story on this. I think it must have been last month. So last month, GameStop stock surged again. Of course, hopefully everyone kind of remembers the 2021 meme stock surge, but it kind of was reignited last month when Roaring Kitty, kind of the face of the GameStop short squeeze, and they made a movie about him, broke his silence and posted that the infamous gaming chair tweet. And then he kind of followed it up with a bunch of movie kind of clips and memes, all kind of suggesting, he's going to make some kind of return. And that's what we spoke about, I think, maybe a few weeks ago, where the stock surged from about $10 per share up to $50 per share. So, he has quite an influence.
It's pretty wild, isn't it? It's pretty wild. I just have a feeling like the directors of Dumb Money reached out to him and like, hey, dude, the first movie went well. We need some material for a sequel. Can you... He delivered.
Yeah, I'm putting together... I haven't finished the video yet, but I'm putting together a video on this, and that's exactly what I said in the video.
Really?
It's like the movie just came out, I think it was like September of 2023 or something like that, and they've already got like plenty of material for a sequel.
Yeah.
Which doesn't happen too often with true story kind of movies. Like I don't think we want to see a Big Short 2. I don't think we. Hopefully we don't get one of those. But I'd take a Dumb Money too. I actually watched it for the first time just last week.
Oh, dude, me too. I watched it. That's so funny. I watched it with Tash like just the other day.
It's actually a pretty good movie. I enjoyed it.
Yeah.
I enjoyed it.
It's not bad, actually. Yeah, you're right. It's not bad. I mean, I think for us, because we followed it so intensely at the time that all this stuff came out, there wasn't any sort of mystery or intrigue for the story, because I already know what happens. Like, we already knew, we followed it so closely. Yeah. We knew all the players. We knew how it played out. But, it was still entertaining. It was still a good movie.
Yeah, exactly. We spoke about this kind of first peak that kind of happened on May 14th. And essentially what stopped the peak was GameStop came out and they announced an equity raise. So they said, we're going to take advantage of the fact that the stock is surging and sell a bunch of new shares. They sold 45 million shares and raised almost $1 billion, $933 million. So, good for them. They raised $1 billion from a gaming meme being posted on Twitter.
Wow, that when you put it like that, Hamish, that is wild. When you put it like that, that is absolutely bonkers. It's funny that they're just like, all right, we're $1 billion richer now thanks to Roaring Kitty. Appreciate it, mate. Can you do that again? We'll raise another bill. Yeah,
and that was only really the beginning as well. They've actually a bit of a sneak peek, but they've gone on to raise even more money.
Oh, okay.
Because it did not end there. It was not just a single peak. Same as 2021. There's looks like we're going to get a couple of rounds of meme stock mania. The second kind of round began on June the 2nd. When Roaring Kitty, Keith Gill, posted screenshots of his portfolio on Reddit. For the first time, this is something back in 2021 that he would do quite regularly. Previously, he would post on the Wall Street Bets subreddit. These ones are being posted on the subreddit Super Stonk under his classic deep effing value screen name, which is a great screen name,
Classic.
by the way.
Classic.
And he essentially revealed that he has 5 million shares of GameStop held directly and 120,000 call options with a strike price of $20, expiring June 21st, which is just less than a couple of weeks out from now. And so he has 5 million shares directly. He has options to buy another 12 million shares, and the total bet that he's put down is $174.5 million. Wow. Which is actually insane.
Oh, wow.
And maybe just as a refresher, back in 2021, the whole kind of story was he turned about $50,000 into, at the end of it, he had about 30 million. Right. Now he's kind of come out up 2 years later and he has 175 million somehow. So, that's quite a growth path from 50,000 in 2019 to to almost 200 million, by 2024. So pretty crazy. Of course, posting this screenshot, the stock rose from $18 up to $40. Then on June 6th, he posted another screenshot showing that the bet was now worth, because of the stock rise, $586 million.
What?
So he was rocketing towards becoming a billionaire.
Holy
which
smokes.
is actually insane. And so he was kind of riding this wave. And then on the 7th, on the same day, June the 6th, he scheduled his first live stream back. So he scheduled this live stream for Friday the 7th of June, and it would be at 12 p.m. in the middle of the day. And in after hours on the Thursday before the live stream, the stock went to $61 per share. So it had gone from 10 to 61. Wow. 5x in just over a month.
Wowzers.
Which is
well done, Roaring Kitty.
Yep. Pretty insane. Unfortunately, it seems like, a lot of people are suggesting he's like kind of manipulating the market or whatever, but he's obviously doing all of these things that are kind of making the stock rise. But unfortunately, the GameStop, the company, also has some ammo, and they have their own weapons. The first peak was stopped by them raising shares. And before the market opened on the Friday, so before this live stream was scheduled, they actually just released their earnings early, a week early, or a few days early. So they released their earnings early, and it showed that the company had a 29% loss a drop in revenue, and they were still unprofitable, $32 million loss, although compared to about a $50 million loss last year. And the reason why they released their earnings early is because they wanted to announce another capital raise. And so they announced that they plan to raise, to sell another 75 million shares.
Right.
Which would bring the total to 120 million new shares. And to put that in context, before the raises, the company had 305 million in total. So, that's diluting by about a third,
wow.
which is obviously massive. If you were a third shareholder, if you owned 33% of the company, after this, you would own 25. Like, it's a big kind of shaving in the piece of the pie that you would own now that there's a bunch of new shares.
Wow.
And, of course, this, killed the stock. The stock went from $61 to $37 just in pre-market trading, which is minus 40%.
Oof. Wow.
And it didn't get better from there.
Dude, I've missed a lot. Missed a lot by going away for a few days. Holy smokes.
This is what I'm saying. This story is, it's as we said, we spoke about it a bit last month, and it was kind of just a little, he posted a couple of memes and the stock went up and it went back down, capital raise. But it's starting to, building momentum. It's starting to form more of what we saw in 2021 where there was kind of this whole, story behind it of all of these, at least in 2021, it was all of these Redditors, trying to go after hedge funds who were shorting the stock. And there was this whole like retail versus, smart money versus dumb money battle going on. And it seems like it's kind of bubbling up again, which is interesting.
I missed it. The only thing that I heard about this is what you messaged me while I was at Uluru, where you were saying, hey, dude, look, Keith Gill's Roaring Kitty's going on, and he's going to start live streaming again. And there were like, I think you said something like 13,000 people waiting in the offline chat for this live stream. Is that what happened with that? Because I didn't see the live stream. I was away. I didn't have internet really.
Yeah, so he scheduled the live stream about a day before he went live, and I just pulled it up to set notifications for it. And it was like more than 12 hours before he was going to go live, and there was like more than 10,000 people just sitting in the offline chat. So I immediately knew like this is going to be enormous. In the end, at the beginning of the live stream, there was 600,000 people watching live.
Holy.
And to just put that in perspective, because maybe people don't know like what's big in live streaming, like the biggest live streamer at the moment on Twitch, for example, averages about 90,000 per stream.
Wow.
And then if you go down the list, it'll be like 60,000, 50,000, 40,000. Like there's only a handful that are above 40,000 live viewers. So 600,000 is like a massive event. 600,000 is enormous for the live streaming space.
Right. That's insane.
And so 600,000 people are tuning in. At 12 o'clock, the stock's at $38, so already down from 61. He is a little bit late. He goes live around 12:30, and he only goes live for about 50 minutes. And during the live stream, the stock fell 20%.
Wow.
Which is actually crazy. Dude, watching the stock just in real time, just free fall, was absolutely insane.
What? I would have anticipated it would have gone the other way.
Well, I'm sure that's probably what Roaring Kitty was hoping for.
Wow. Okay, so it didn't play out.
Stop the bleeding. So by the end of the stream, it was $29 per share. Again, down from 61, which is where it peaked when the live stream was scheduled the day before. There were 17 trading halts. That's how volatile this stock was during that day. There was 10 trading halts before the stream started, 7 during the stream. And to put that in perspective, each of these halts is 5 minutes. So there's 7 during a 50-minute stream. That's 35 minutes of the 50-minute stream. The stock was halted because every time it started again, it was immediately too volatile and it just had to stop.
That's
like
crazy.
More than half of the stream, it was halted. And it still dropped 20%. So that just shows you, as soon as it was unhalted, it was just dropping like a rock, and then they had to stop it. And then
that is wild. So it really didn't work out for him when he streamed. It really tanked. I imagine he would have been hoping that stream would have sent the stock up bananas, right?
Yeah, I think so. And I think, we've both seen our fair share of, CEOs talking on conference calls, and the stock is, you watch on CNBC and they have their live ticker and it's going down. But this was something else. Like, I've never seen anything this bad. This was like maybe the worst decision in hindsight for him.
Yeah.
Especially knowing how much money, he has riding on this, particularly on this short-term bet. And speaking on that, he did show his portfolio during the stream. So on June 10th, where did I put it here? So he showed the portfolio was worth $350 million, which was down $235 million on the day.
Holy!
Minus $235 million in a day, which is kind of crazy. But still, he was still up on the bet. So I guess how mad can you be? But that's quite a that's quite a decline.
Crazy, man.
Just to, that's basically, there wasn't really anything too much that happened on the stream specifically. He kind of just reiterated some things he'd kind of said before about his thesis and that sort of thing. And then just the last couple of updates on this story that we've got so far. Obviously, there might be more stuff that's happened since, because this is just every day there's something new happening. But the GameStop completed their capital raise. They raised over $2 billion. So after all of this, the company now has $4 billion in cash. They have no debt, and they're not profitable, but they've been eking towards, break even after obviously COVID kind of decimated their business. And there's still kind of, secular decline of people not buying physical discs as much, but funnily enough, the company's actually in a relatively interesting position because they have $4 billion in cash now. And no debt,
wild.
So I guess now we'll see what they can what they can do with it.
It's a good spot to be in. I mean, obviously, you'd prefer to be profitable, so that you don't have to keep eating away at that cash. But I mean, having no debt, you don't owe anything to anyone, and having that big cash injection. I mean, maybe it's just prolonging the inevitable potentially, but if you were, the CEO of GameStop, you'd much prefer this situation than having no cash and a failing business model.
Yes, exactly. And some of the shorts, some of the hedge funds that have been shorting, feel that now that they've got a bit of cash, that they're actually, some of them are backing out. I think it was, is it Citron was one of the companies shorting. I think they recently announced that they closed out their short position.
Right.
They called the live stream, what did they say? They called it it was like a disrespect to financial markets or something, an insult to financial markets.
Oh,
I think is what they said. They sounded, it sounded like the CEO wrote that memo in tears. So that was kind of funny. But yeah, now the thing is, we're just going to have to watch. The next couple of weeks is going to be, fascinating because his portfolio, his position is worth, according to his latest screenshot, $235 million. And he has basically a $70 million bet that expires on the 21st of June. And this isn't stock. This is, it's an option.
Yeah.
So he's bought options. So if the stock is, below $20 on the 21st, he loses it. He loses everything.
Expires worthless. Wow.
And so, yeah, I'm sure we probably haven't heard the last of Roaring Kitty, given that the next 2 weeks are very important for his net worth. So I'm guessing we're probably going to see some live streams. Definitely, well, we have been seeing continued posts on Twitter. He keeps posting memes and stuff.
Right.
So,
Interesting.
So yeah, it's going to be fascinating.
There you go, Hamish. Thanks for bringing me up to speed on that. That was very interesting. Holy smokes, a lot of stuff has happened. Whew.
Yes.
All right, let's take a breather. Let's talk about something not quite as controversial. No, I'm just kidding. It's probably equally as controversial. Elon Musk.
Elon Musk controversial?
No, he's not controversial.
Couldn't possibly be.
He just likes to make electric cars and send rockets to space. He does. Elon Musk, he had his compensation deal voided by that Delaware judge, and they're going to take the compensation package back to the shareholders and ask them again if they think that this is fair. So they're going to get another shareholder vote on Elon Musk's compensation package, the one that the judge took issue with, in the hope that if they get the shareholders to approve it again, then they can go back to the judge and say, look, you didn't like how he did it, or something about the first package, and how you think that we didn't disclose things to shareholders, blah, blah, blah. Well, we've done that now. We've gone back to them, and they still say okay. Now, that's what they're hoping will happen. So we'll see what happens. But yes, I'll just read you what this Reuters article has to say about the compensation plan. So it basically goes through what happens if the shareholders vote yes, what happens if they vote no, how long is it going to take, what's the likely outcome, that kind of stuff. So the article reads, Tesla's board is hoping shareholder approval will give the electric vehicle maker the legal ammunition it needs to reinstate the package, though that is far from certain. The company has also said if the compensation plan is rejected by shareholders, it expects Musk would only accept a pay package that is similar in size to the voided one. Yeah, true, because they'll have to sort out what his next pay package is going to be. Here is what we know about the potential outcome. So what happens if the shareholders vote yes? So Musk's pay package is not reinstated automatically, definitely not. Tesla has said it will seek to reverse Delaware Judge Kathleen McCormick's ruling in January that invalidated the compensation package as unfair to the company's shareholders. McCormick found that the Tesla shareholders who in 2018 voted in favor of granting the pay package were not fully informed and how beholden many directors were to Musk and how this affected the compensation negotiations. So Musk was a little bit too close to the directors, she thought. Tesla included McCormick's ruling in its disclosures to shareholders ahead of the vote on Thursday and has said it plans to argue that an affirmative result would show that shareholders back the package with full knowledge of McCormick's criticisms. Zohar Goshen, a professor at Columbia Law School, said it is unclear whether such a move would convince McCormick. Quote, it's hard to estimate how the court will rule because there is too much noise around this decision. So if Tesla fails to convince McCormick to change her ruling, which she has not yet made effective, Tesla plans to appeal all the way to the Delaware Supreme Court, a process that will likely take many months. Tesla is also asking for shareholder approval at its annual meeting on Thursday to move its corporate domicile to Texas, outside the reach of Delaware courts, but it has said it does not plan to use the move to ignore McCormick's ruling, and she has accepted those assurances. So that's the first half. If the shareholders vote yes, it doesn't mean that the pay package comes back in. It just means that they can then take that updated vote back to the judge and say, what do you think now?
Yeah, it seems like that would be. It seems like it would be odd if if everyone voted on it again. Now with all of the information, now that the shareholders know how much it really is going to be, or it's more clear, it seems like that would be insane if the judge was still like, nah.
Yeah.
that would be ridiculous.
But it's interesting because this compensation package was only extremely lucrative if Elon Musk grew the company like bananas. And that was like the motivation. All right, if you grow the company and if you give the shareholders total shareholder return that's just like amazing, then sure, you can have a big fat payday. And he said, all right, and he did it. So that's the only reason that he's getting this massive pay package to begin with, is because he's brought the stock up like more than 10x since when the deal was signed.
If you held the stock like you have for like, many years, maybe before that plan was put in place, then like why you're definitely not kind of complaining. I think that the fact that he's making a bunch of money.
Yeah, but I think what the shareholders are saying now, well, some of them, well, hang on, if we get a second opportunity to vote on whether we give Elon Musk this massive pay package. If we say no, let's not give it to him, then we can essentially save ourselves $50-something billion as shareholders of the company. Elon's put in all this work, and we can now say, ha, you don't get paid for that work. And instead, who gets to keep that money? Well, it's the owners of the business, which in part is Elon Musk, but also the shareholders, the other shareholders. So it's a little bit dog, and I don't think Elon would take too kindly to that happening. I think that might cause a bit of a stir. But there is the question, well, what if the shareholders vote no? And the article says Tesla has said it is determined to pay Musk for his previous work through the 2018 plan or a new one to ensure he devotes his time and energy to the company. It can still try to reverse McCormick's decision in Delaware, but it will have a weaker hand if shareholders reject the package. Given the appeal could take Tesla beyond next year's annual shareholder meeting, this could give the board some breathing space before it has to negotiate a new pay package with Mr. Musk. Tesla argues that the costs to shareholders will be significantly greater if the pay package is not reinstated. I'm not exactly sure how this works, Hamish, but this is what the article reads. See if you can get anything from this article. The company booked a $2.3 billion accounting charge to issue it in 2018. Okay, it estimates that to give Musk a new package with the same economic benefit, the accounting charge it would have to take would be more than $25 billion. Because of the rise in Tesla's share price since 2018. It said the new package would have to be less than 10% of the size of the 2018 plan to avoid a new charge.
I mean, just like that's an accounting charge.
An accounting charge. I don't quite understand how accounting charges work, Ben, but that's bizarre.
Well, his pay is in stock, right? Like that's like the package, right? It's like $50 billion in stock, right? So, like it's not costing the company anything in cash. So
True.
Talking about it, to me that's a weird thing to say, because it's not like they have to take company cash and buy
and put it in his pocket
stock and then exactly or just give it to him. So there will be there'll be a compensation line expense on the income statement.
Yep.
But it's not like it just reflects the dilution, which would be the exact same regardless, because it's in shares. It doesn't matter what the stock price is.
Yeah.
At least that's the way I interpret that. But maybe I'm
not sure.
Something.
Like when it comes to accounting charges, I don't really understand that, to be perfectly frank. But anyway, that's what they're arguing. It also says Tesla has also warned that if McCormick's ruling stands, the shareholders will bear the cost of its legal fees. The legal team representing the Tesla investor who challenged Musk's pay is asking for $5.6 billion out of the Tesla stock Musk would have received as a fee, though the company is challenging that request. So there you go. And then finally, the article talks about, will Tesla lose Elon Musk if he does not get the pay package? And it says here, board chair Robin Denham, an Aussie, said in a regulatory filing last week that reinstating the pay package was necessary for, quote, retaining Elon's attention and motivating him. I think that's fair. He's going to feel pretty ripped off if he doesn't get the compensation package. Skeptics say Musk's 13% stake in Tesla, worth some $75 billion and accounting for a big chunk of his wealth, as well as his 2 decades at the company, make it unlikely that Musk will walk away. He could also face shareholder lawsuits if he is shown to be neglecting his CEO duties. So there you go.
Okay.
Samantha Crispin, a corporate attorney at a global law firm, Baker Botts, said it would be hard to predict how Musk, who draws no salary from Tesla, will respond. Quote, "That's the $56 billion question."
It's such a funny situation because on one hand, I'm like, the shareholders voted on it, they decided on it already.
Yeah.
So it is what it is. But at the same time, it's like $56 billion. That's why it's just funny because it's the most egregious pay package. It's just funny. It's not like
huge.
It's not like, oh, you agreed to pay us, $100 million, and it's like, yeah, that's a lot to pay a CEO of any company for a couple of years or something.
Yep.
It's like $56 billion.
Yep.
Which,
it's quite a step up, isn't it, Hamish?
It's the funny part around all of this is that.
But anyway, so that vote is happening tomorrow. So we'll be sure to update you guys next week with the result. Although not that will, as we've been talking about, have a definitive closure to the whole event. But yes, we shall see what happens. All right, Hamish, back over to you. What is next, my friend? What is going on?
I've got a really, really quick update around US inflation.
Oh, yeah, I saw that.
This will be super, super quick. But we've got more good news.
More good news. Tell me about it, Hamish.
Have you seen? Yeah, so the consumer price index in May increased 0%.
Oh.
Inflation was it's gone. Inflation's gone.
It's solved.
So we're done.
It's solved. All right. Back to normal, everyone.
Yeah. Maybe not that. Maybe not that good. But yes, the monthly month-over-month increase was 0%, and that brought the annual CPI figure to 3.3% compared to 3.4% last month.
Okay.
So the monthly rate was really good, and the annual rate is 3.3%. It's not it's getting closer. It didn't actually go down all that much because last year in May, inflation was also really, really low.
Okay.
So I don't know if that's like a seasonal thing. Businesses don't raise their prices in May. I don't know. But in both of them, I think last year was like 0.1%. It was like noticeably lower than the other months. So maybe that's just something to keep in mind. But yeah, obviously good news. Driven by the big declines in energy, gasoline was down 3.6% month over month. Gas was down 0.8% month over month. In terms of core CPI, it came in at 0.2% month over month and 3.4% year over year. And the main kind of the main drivers were new vehicles declined by 0.5%, used vehicles increased by 0.6%, apparel was down 0.3%, and shelter, so mostly kind of rent increases, was plus 0.4%.
Yeah, there you go.
So yeah, this is a pretty quick story, and then just kind of just to tack on the end of that, this morning or at least this morning for us, we got the interest rate update out of the Federal Reserve, and Jerome Powell pretty much said the exact same thing he's been saying the last couple of months. He kept interest rates in the same range. I believe it's what's the range at the moment? 5 to 5.25%.
Yeah, I believe so.
Can't remember off the top of my head. And he seemed to be indicating that there will now maybe be one rate cut this year instead of the 3 or 4 that was projected at the start of the year. So the same story we've been talking about all year, which is they set a projection at the start of the year and it's slowly just adapted based on what actually happens because they can't predict anything. So,
well said, Hamish, because they cannot predict a single thing. They have their hand on the lever, but even they don't know which way they're going to push it.
Yeah. I was trying to find a nice way to put that, but
I think you did brilliantly, Hamish. That was so eloquent. Well done. Congratulations. Yeah. I looked up this.
I think that's exactly what he said actually at the press conference. He went up there and said, "Yeah, we can't predict anything."
I don't know what's going on, so I'm just going to sit here and do nothing. The rate's 5.25 to 5.5%.
Okay, there you go.
Just to come back on that. But there you go. Yep. I don't know if there's too much commentary to kind of do for this story. It's we're just holding steady, aren't we? We're just holding. Yep. We're just waiting. We're seeing what the inflation numbers do, because it's been a bit like this. It goes up a little bit, it comes down a little bit, it goes up a little bit. So it's kind of hovering, isn't it? It's just hovering in that 3% range, which Jerome has said is too high. We don't like that. We got to keep it coming down. Thus, he's kind of keeping the restrictive policy where it is at the moment, and I imagine will do so for quite a long time to come. And meanwhile, what the market's response is, let's go up some more. Why do we need to stop going up?
Yeah.
Let's just keep going up.
Yeah. Yeah, I was having a look. I think year to date, the S&P's up 15% already. So yeah, it's continuing its trend of, if it's a US election year, the market usually does pretty well, I think, right? Leading into, I'm pretty sure election years are usually some of the best years.
There you go.
I think I remember that correctly.
Oh la la.
Yeah. Yeah, well, I guess we'll see how the second half of the year plays out.
Yep. Well, there you go, Hamish. All right, shall we move on to...
Yes.
Guess what? We've got an AI news story, everybody. Dun dun dun. Roll the segment. AI news story.
What's that again?
AI news.
AI.
AI. Oh, it's this new thing, Hamish. Let me tell you. It stands for what does it stand for? I think it's like artificial intelligence or something. No, it doesn't stand for that anymore, everybody. It stands for Apple Intelligence. Yes, you heard it here, folks, everybody. Apple Intelligence has been announced. Doesn't this just excite you, Hamish?
Dumb.
Isn't this just the best news story of the week?
Yeah.
It's kind of funny.
I'm so excited.
This is a bit of a meme, right? Apple would never say AI in their in their announcements, in their showcases. They'd avoid the word AI. They'd say machine learning. They'd say neural nets. They'd say all this sort of technical jargon, but they would try not to say AI. And now that is clearly stopped because they finally landed on something they can run with. We cannot possibly say artificial intelligence, but instead Apple Intelligence. That is what AI stands for, everybody. Get with the program, Hamish.
Well, yeah, I mean, Apple does this better than anybody else, which is they never want to be associated in any way, even if it's the same technology or a similar technology. They never want to be associated with any other company.
No.
And they have a really good way of branding and presenting. Even if you think it's kind of goofy, they always make their own names for things and try and present things in a good way. And generally, they do a pretty good job. We just saw Microsoft say that they're gonna, screenshot your computer every millisecond, and that is like the polar opposite of what Apple would do, like when announcing something similar like to that. And I think they kind of did announce something similar to that during this. But the way that it's just funny seeing Apple is so good at crafting a narrative and crafting the feelings around the things that they're talking about,
just like having
versus Microsoft,
just like showing good animations, just like saying some random BS, which is like, with Apple Intelligence, you know that privacy is always at the core, making your navigation a seamless experience and a safe one. And then they just show some amazing neural net, a couple of padlocks closing, and everyone's like, oh, privacy first. Oh, it's like what? Anyway, but they do. That's all they have to do these days. It's just their presentations are so flawless that people are like, oh. But anyway, so what's going on? This was announced at WWDC the other day, their developers conference that Apple holds once a year. And Apple Intelligence is going to be implemented across some of the newer devices. I think it's pretty much if it's got an M chip in it, an M1 or greater chip, then it's probably mostly going to be you're going to be able to access these features. So I don't want to harp on about this too much, but some of the stuff was kind of interesting. So if you're writing an email, you can now just highlight your text, right click, and not right click because you're on a Mac, but you can just highlight it and there'll be a couple of Apple AI options of whether you want to change your tone. You can, make it more professional. You can make it more friendly, and it'll just automatically adjust the tone of your email, which is cool. It can proofread your email, that kind of stuff. In terms of images, this stuff doesn't faze me at all. I'm not interested in this, but it will now create an emoji for you based on what you want. So you can say a dinosaur DJ, and it will come up with a kind of a image in that emoji style that you can use, send your friends. I mean,
It's exactly what I needed.
yeah.
Yeah.
Yeah, exactly what you need, Hamish, because words you can't quite get your words out sometimes. You need that perfect emoji, don't you? All right, another thing, Image Playground, again, something that I don't really care for. They're going to be able to generate images based on prompts, so you can just say, a couple of different things, do a classical style, this image, Tony Hawk eating a finger bun, and there you go. But
It just came straight to your mind.
Yeah, exactly. The more interesting stuff is when it comes to Siri, I think. So Siri's getting a bit of a makeover with this AI backing.
Yes.
So when you talk to Siri, you can now stumble, you can make mistakes, you can correct yourself, and Siri will still understand you, which I think is good, because that always annoyed me when I talk to any assistant and I make some mistake and I'm like, oh, that's so annoying, because then they're like, I'm sorry, I didn't catch that. You just have to start the whole process again.
You pause for literally a millisecond to just change what you're going to say or think about it, and it just thinks you're done.
Yeah.
That is the most frustrating thing.
Yeah.
Oh, yeah.
Yeah. When you're trying to remember something and you can't quite in time, it's like, sorry, I didn't understand. It's like, oh, God damn it. What else can Siri do? Siri can also draw from your messages, your emails, your photos, and your calendar events and other apps to make it much more useful. So they show someone, for example, asking Siri what time their mum's flight lands, and then goes and draws information. It figures out who your mum is. It goes through your emails or your messages, and then in this example, it uses the emails and it finds the flight time to say your mum is landing at 8 o'clock. So I thought that was pretty cool. Yeah, sorry.
No, yeah. So that was a bit I thought was really interesting, because that's not entirely the same as what Microsoft was announcing, but effectively it kind of is. In that, Microsoft was saying, we're going to screenshot basically screenshot your computer every second so that you can search for things across your screen and that sort of thing. And this is kind of the same as that, but the way that Apple presented it was way better than the way that Microsoft did.
Yeah.
Interesting.
Yeah, it's definitely in the presentation, isn't it? Okay, in terms of notifications, this is boring, but it's going to use AI to judge your most important notifications to you and serve those notifications to you first. Whoop-de-doo. In photos, it's going to understand everything about your photo library, including who's in the photos. So you can ask, Apple AI to retrieve a photo of Hamish in his Borat mankini, and sure enough, it'll pop straight up, and I won't have to search through my hundreds of photos of Hamish just to find the one of him in his mankini. So that's pretty cool.
Nice.
Yeah, sorry, I did violate the rule of what goes on in Vegas stays in Vegas. But anyway, that's fine. And then lastly...
Imagine.
And then lastly, they announced a big partnership with ChatGPT. So ChatGPT from OpenAI is now integrated into Siri and also some writing tools. Siri can tap into ChatGPT for certain requests, including questions about photos or documents, and it can compose stuff as well in writing tools. You can create and illustrate original content from scratch. So there you go, Hamish. Artificial intelligence? No. Apple intelligence. With privacy at the
fantastic
center.
Yeah, it's funny because I guess we'll see it when we I guess we'll believe it when we see whether Siri actually is good now, because notoriously it's been pretty useless. But that's the thing I've been talking about just generally as one of the most exciting things for AI, I think, which is actually having a phone assistant that is kind of like what you can use on ChatGPT at the moment, where you can actually just have a conversation, and it really does seem to be quite good. Like if you haven't tried it, using the voice like AI with ChatGPT, it's pretty impressive. You can have pretty reasonable pauses in your tone. You can mess up things and just be like, actually, no, I didn't mean that. I meant this, and I've never had any kind of issues with it understanding what I'm saying, even though my sentences are all over the place. So having that with your phone, and maybe some people think this is are not too keen on this, but I think it's cool that they can draw from your messages and and it's just like an assistant, like an actual assistant.
Yep.
That you can say, yeah, I remember I was talking to this person about, meeting them, in 2 weeks or something. Can you tell me what time I said rather than actually having to search it? That's pretty cool. And maybe that won't work super effectively for now, but eventually I'm sure that'll be something that'll be quite effective.
Yep. Yeah, for sure. All right, Hamish, take us home, mate. What are you talking? Oh, we're going to talk about ads.
Yeah, exactly. I saved the best till last. Everyone's favorite topic, advertising.
I mean, it's my favorite topic. Surely it's yours
we
too.
love ads.
We love ads.
We do. And in case, there's anyone out there who's kind of forgotten what an ad looks like, and you're on Spotify, here's an ad. Right? No, I'm just kidding.
What rolls downstairs from motor and pairs rolls over your neighbor's dog? What's great for a snack and fits on your back? It's long, long, long. It's long, long. It's big, it's heavy, it's wood. It's long, long. It's better than that, it's good. Everyone wants a long. You're gonna love it long. Come on and get your long. Everyone needs a long.
Log from Blammo.
I'm going to do it. I'm going to do it.
Is it? No, don't do it.
No, it's done. It's already been done. I'm going to put an ad right there.
Well, yeah, that was an ad. So now that you know what an ad is, let's.
Oh dear, people are probably going to hate me for doing that, but that's just such a good opportunity. I can't not do it.
That's really funny. No, so we've got some research data out of Group M, who looks at global advertising revenue, in the halfway through the year, they make their projection for what global revenue will look like in 2024. And there's some pretty interesting kind of characteristics to it. So they're now projecting that 2024 global advertising revenue will be nearly $990 billion, excluding US political advertising, and is now on track to pass $1 trillion by 2025.
Come on.
So
get that number up.
The ads, pump that number up.
Yeah.
The global advertising market is massive and it's growing, and we love it. We're here for it.
We're here for it. Our AdSense account is ready for it.
Exactly. When I get 2 15-second unskippables on a YouTube video, I just always wish there was a...
I wish there was a... Honestly, that is the worst. That is the worst. I mean, this is the crazy thing. I'm such a hypocrite, right? Because obviously, YouTube is free because there are ads, and that's how it makes it worthwhile for us as well. That's how we can run our business, because there's ads and we collect some of that advertising revenue. But damn, I should be all in favor of long ads, unskippable, make them watch, make them click. But when I get served an unskippable ad on YouTube, there's just something. It just tickles me just deep in my brain, and it makes me rage. I just cannot handle it.
See, this is where we differ. I actually watch YouTube for the ads. I click on a video, I watch the ad, and then I just go to the next video. That's actually why I go on YouTube. And I'm sure I'm not alone out there. I'm sure...
Hamish, I can guarantee that no one has ever said that. You know how you try and think of there's a sentence that's never been said ever before. I'm pretty sure that was one.
Yeah. No. Just becoming like a complete advertising shill. We love ads.
We love it.
No, nobody likes ads.
Supports
of course.
the economy.
It's great for the economy.
Anyway, back on track. All right, lock in, Hamish.
Back on track. So in the US alone, Group M now predicts that ad revenue in the US will reach $365.9 billion this year. And they cited restrictive interest rates in the US haven't cooled consumer and business investment as much as previously predicted. So they're now projecting that revenue will be a little bit higher than they had predicted at the start of the year. China is the second biggest market. Ad revenue will total, or they're expected to total, $199.4 billion this year, which means that the US and China together will be around 57% of all global advertising.
Wow.
So it gives you a kind of a perspective of the world we're kind of moving towards. We're already in it, but certainly the US and China are the two big superpowers. Yeah.
We better start learning Mandarin.
And Exactly right. As you might expect, digital advertising, online advertising is an enormous part of the global advertising space now. Is estimated to be $699 billion this year, up 10% year over year, and representing 70.1% of all advertising.
Yeah, it's wild.
So, within the space of 2 decades, but really the last 10 years is where most of that has occurred. Within a decade, you go from mostly, outside advertising, TV advertising, that sort of thing, and now
billboards,
it's mostly
magazines,
online.
all sorts, newspapers.
Yeah, exactly.
It honestly surprises me that now, like I know that that's a big shift, but it honestly surprises me that 70.1%, that number is not a bit higher for digital advertising. Like,
True.
Digital ads is just where it's at. I mean, I guess there's still some.
For sure.
I guess there's still some demographics of people that interact more with non-digital ads. So I guess that makes sense.
Yeah.
Maybe some of the older generations, and there's a lot of people in those older generations. So
yeah, there's just a lot of places ads can go.
that's true.
You have out of home ads. We're so like numb to it, but if you take actual kind of notice, you get off the tram. The tram stop, the tram itself, the billboard, everything. There's ads.
Yep.
And
everyone listening along at home, look under your seats. Guess what?
Guess what? Thought we were done with the ads this episode. Here's another one. No,
there's an ad. Anyway,
every time we say ad, we stick a new ad in.
Oh God! Oh, how to ruin our audience, Hamish?
Yeah, no, let's not do that. And then I was kind of curious to see, where's Google and Meta in all of this, because obviously they're the two big digital online advertising juggernauts. I had a look at their advertising revenue from last year. Combined, they had $370 billion. So combined last year, compared to last year's numbers, they were almost 60% of all digital advertising.
Wow, okay.
Is done on their platform. So
huge.
They're obviously, the main players in the space, but there's also there's a third of the internet advertising that is not done through their platforms, which I thought was quite fascinating. It's quite a large piece that goes to companies like Amazon and publishers. Wall Street Journal maybe they run advertising. Actually, I don't think they do. Oh, yeah, I guess they do on their free stuff. But
yeah, there you go.
Sites doing their own advertising and stuff.
Interesting.
Yep. The fastest growing category was retail media, which is interesting. Grew by 17.5% year over year.
What is that?
Was expected to. And that's the exact question that I had.
Right.
It's things like posters and like promotional stands in retail spaces.
Oh, okay.
I also had the same question. I was like, what is retail media?
There you go.
But there you go. It's the fastest growing category. I think it's a relatively small piece of the pie. So that's probably contributing to why it's growing so fast.
Easier. Yep.
And then in terms of other categories, so they splice out search specifically from digital. That grew by is expected to grow by 5.3%. Audio, so radio, was up 0.3% or expected to be. Print was minus 3%.
Yeah, it's dying, isn't
so
it?
that's kind of the biggest. Yeah, print's. Yeah, I mean that's no surprise. Print's the biggest drop off. Cinema was plus 7.1%. And out of home, things like billboards, tram stops, and bus stops was 11.5% growth.
Right. There you go.
And then I missed television. The television came in at 2.7%, or is expected to be 2.7% growth. But also the way that they calculate it is kind of weird. They include both traditional television and connected TV, and connected TV is the like streaming services and that sort of thing on TVs.
Yep.
So they kind of combine them together, and I thought that was kind of odd. So I tried to separate them, and basically connected TV ads grew by 20%. And traditional TV ads declined by 1.7%.
There you go.
So even though the whole category grew, it's kind of a pointless stat because you've got like streaming ads which are growing because they just started. So obviously they're very small in dollar terms, and traditional TV ads dying, which makes sense.
Yep. There you go. That is quite interesting. The world of advertising. Something that we have to pay attention
Yep.
to. All right, team.
Gotta love
Sorry, were you going to say something, Hamish?
I just said gotta love them.
Gotta love them.
ads.
Exactly.
Just trying to drill that point in one more time.
Yeah. Everybody, we love ads. Nothing better than a bit of advertising. All right, we're going to bounce out of here, guys. Thank you very much for tuning in to this episode, as always. Hope you enjoyed. Thanks, Hamish, as always, for joining in and hanging out for the last hour or so. And trying to think of if we have anything more to say, but I think that's just about it. That's going to be a very abrupt end to the podcast. Normally, I somehow waffle for about 2.5 minutes.
It's all right. We can give him another ad. Do we have time for one more ad?
Do we have time? I think we've run out of time, Hamish. I think we've run out of time.
We'll do a post roll. We'll do a post roll. So yeah.
I wonder what the retention on that would be. Very, very low.
It's going to be really high because we love ads.
Because
I know you guys are going to stick around.
Our audience is so warm for an ad right now. It's going to work effective. This is going to be our highest earning podcast ever, Hamish. Just you wait.
Yeah.
All right. No, it's not going to be, quite frankly. And with that said, we're going to bounce out and go get some lunch. All right. Take it easy, everyone.
Yep.
We'll see you next week.
See you guys.
Log from Blammo.